Check, please.
Hey, welcome back to Everything Money. We have a special guest in the studio. He's here for a number of videos. It's Jimmy Covel from Learn to Invest. Jimmy, how are you?
Good. Hi, I'm Jimmy.
He's in the studio. He traveled all the way here. And in this video, we're talking about Facebook Meta platforms. We're going to talk about the stock, the company, where it's heading, why we own the stock, and where we think it's going. I give you Paul, Jimmy, and Mo. Welcome in, boys. Go ahead, fellas. Take it away.
So first off, I think we're missing out on a big opportunity for some content.
Go on.
We have dinner tonight.
Yes.
Jimmy's not wearing a Nautica shirt. There is a mall across the street from Fleming's. We could go there and buy him
a full outfit.
A full outfit that I get to pick.
Does he dress what if he dresses like me, Paul, with the full flower shirt?
I get to pick the outfit. His next week of videos, he has to wear the outfit that I buy for him. Velcro overalls, anyways. So guys, Facebook hit a high of like 389 or 392 or something crazy like that. And it seemed lofty at the time, and then it just plummeted one day when they missed revenues and were guiding. They didn't miss revenues. They guided that it was the first time their average monthly user decreased. Now, guys, is that important? Absolutely. Mm-hmm. But you've got to remember, Facebook has only been generating a lot of money on revenue, on advertising for a short period of time. They're still young in it. Their per user revenue growth potential is still large. So even with flatline or slightly decreasing monthly average users between Facebook, Instagram, WhatsApp, and Oculus, they have a lot of revenue potential per user still left in the gun. And that's what I'm banking on. I'm banking on everybody's, oh my God, the average user growth declined, the average user declined, plummet stock. It went from 390 to, what are we at right now?
230.
230. It got as low as 170.
180. Was it in the 70s?
I don't remember. 170 something. It went something. So I started buying it in the high twos. And I think my average right now is probably around 240 or so. So I'm still, what is it even today? 220 we said?
229.
Okay, so, oh, wow, 229. Is it up a lot today?
3%.
Wow, okay, so I'm climbing back. But guess what? When it was at 180, guess how I slept at night? Just like this.
Like a baby.
And I'd scratch myself and go to the other side.
Yes.
I did not care. Because when you buy a stock based on the long-term potential of the business, and you've done your analysis and your research, I guess, to feel comfortable with the long-term potential, you embrace stocks dropping. You absolutely love it happening. Okay?
It does. It's a bigger opportunity.
Jimmy, give us your take on Facebook, why you entered, what you love about it, and what you've been telling your viewers.
Well, I think that my favorite part about the stock is that, first of all, as Paul mentioned, there was a drop in growth, but this wasn't a negative drop. They went from expectations of like 16% to like 11%. So they're still growing every year. And to me, I'm thinking more of the revenue and the free cash flow numbers. Yeah, not necessarily the monthly users. But those numbers are going to keep climbing higher. Yes, they're climbing higher at perhaps a slower pace than some investors were expecting when they were buying it at 3.25. Mm-hmm. But at this price, given Facebook's size, it's like, what is it? It's like 3/4 of the world's population that's on the internet uses Facebook.
Jimmy, it's literally 3.6 billion people use the Meta platforms
in some fashion, whether it's Facebook, Instagram, Oculus, or WhatsApp.
Thank you.
And that is obscene.
That's half the world.
The way that can be monetized, the fact that this isn't the most highly valued company when they're in front of that big of a group is crazy. I think that the current price, where did I buy this stock?
You bought it. Yeah, I had it. You bought it 280. I'm sorry, 224.
Oh, you're in the positive.
Yeah, 224 you bought.
High five.
Right. Oh, yeah. Very nice.
So, Jimmy, what were your thoughts prior? This huge fall happened on February 2nd. It fell from $323 down to $237 a day later. What were your thoughts prior to that in the 300s? And did you start getting into this, obviously, after this huge collapse?
Yes, that's when I started getting into it. And at the time, frankly, I hadn't spent a lot of time with it because I didn't spend a lot of time with tech stocks in general back then because they were so many of them seemed overvalued. I just was looking for other opportunities. And I really started paying attention a lot like my position in Intel. It was the drop that made me pay attention to it. And the stock started getting killed over a week or two. And then everybody in the community was like, hey, what do we think? What is going on with this stock? And that's when I really started looking closer. And I was like, this is crazy. Their growth potential, the potential upside for the stock, and it got cut way down. So overall, I mean, it was the drop that made me pay attention to it. And then when I did the deep dive on it, it looked fantastic. This company, my question is 10 years from now, 20 years from now, do I think they're going to be bigger than they are today? Yep. I don't really know the technology that's going to come out 20 years from now. Neither do they. But I can bet you they're going to be a player in it.
And it seems like they already are with Oculus.
Exactly.
Yeah, they're ahead of the curve.
Who knows when that thing takes off, but they're going to be one of the movers, whether they acquire their way in like they did with Oculus, or they, create something new. Either way, they're in front of so many people. The potential revenue there is obscene.
And so, guys, here's our software, our Everything Money software. You can look at Facebook. Oh, whoops. I'm sorry. It's Meta. So you go to Meta Platforms here from an 8-pillar perspective. So according to this, guys, we have all check marks except for our valuation metrics. But remember, if you have a lot of growth potential, you can grow into these valuation numbers. This isn't necessarily overpriced here. I want you guys to look at the analyst expectations. Here's the revenue estimates for analysts over the next 10 years. They're going to estimate to do 132 billion in revenue this year, all the way to 280. That's almost doubling over the next 10 years.
It's more than doubling.
Yeah, sorry, more than double. Here is the earnings per share estimates over the next 5 or 6 years.
Yeah.
1242 to 2171. And guess what, guys? I guarantee they're going to be buying back a lot of shares if the shares stay this cheap. Guys, look at our community. He mentioned community. This is our community chat. Facebook. You type in Facebook, we have 189 results from that. You type in Meta, another 233. We are talking about it. People are talking about Facebook in our chat and having discussions about it, because the great news is we have now become this community of people who think the same way. Instead of being worried about it, your community members are like, hey, what do we think of Facebook here? Right? So I look at this company as checks all around, buying back shares, very low debt. By the way, this company has more cash on hand than all long-term liabilities combined. They can pay off their debts like that. Cash flow growth, net income growth, revenue growth, and a high return on invested capital. So they're making great money on the money that's invested in their business. This is a very important, and software businesses tend to have that. So guys, we created the software because our users were saying to us, how do I analyze stocks without waiting for you to make a video? So it was requested, we delivered. We created all of this that you saw here, all of these amazing tools, including the watch list. So if you want to put Facebook on your watch list and put a certain price target where it says, if it hits this price target, notify me, it'll do that. Everything on this is available on your mobile phone. You'll get the notification on your phone. You can use every tool here that way. Biggest thing though, guys, the Everything Money community. Like I told you, there were 188 mentions of Facebook, 233 of Meta. You can go in there, have a conversation, because guys, research is annoying. It is slow. It's boring. Not all of us are as boring as these nerds who sit in a back office somewhere researching. But if you have the community, you can go in there and have a conversation about Facebook. Right? And that's the whole benefit. There are over 6,000 people in this community right now having conversations every single day. But it's not just about investing. I do quotes. We do day trading. There's crypto conversations. You guys know my take on that one. The whole point is this is all available, guys, for $1 per day. That is it. $1 per day gets you all the software here. 2 ways to sign up. Everythingmoney.com or Patreon for our international users. Guys, whatever price you pay today, you're locked in at that level, even as the price goes up every month. So guys, the best decision you'll make will be, the first best decision you made was following us. The second best one was signing up for the software. Go do it. So we have our stock analyzer tool. Jimmy has his discounted cash flow model, which he'll look at that. Now, Jimmy said something similar to what I always say. One, whenever I look at a company, first thing I ask is, do I think the company will be around 10 years from now? Answer is yes for Facebook. 2, do I think their revenue will be higher or lower than it is today? I think it'll be higher. 3, do I think their profit and cash flow will be higher 10 years from now than today? Higher. 4, final question. Do I think it's selling for a reasonable price today compared to what the value is? And that's what I use the stock analyzer tool for. So let's put in revenue growth numbers. I'm going to go 6, 9, and 12, just to be very conservative.
Wait a minute. Now, as a standard viewer, that is so different, Paul. Can you explain this?
About why my revenue numbers are so
just
low?
So different
well, guys,
from them.
the company's huge. It's not going to do 41% a year for the next 10 years.
Even though it currently is, Mo.
Well, of course it is.
It not currently is doing that. It has done that.
Exactly.
It isn't currently doing that. It has done that.
And it's 636 billion. So I like when you pull out the calculator and say you put in 20%.
Well, let's do
Now,
it's 130 billion in revenue. So 20% for the next 10 years, and they're showing at 130 billion.
Look at this revenue now.
$805 billion. Is that possible? Sure. You know what else is possible? That Jimmy all of a sudden becomes a supermodel and decides to marry me right here on the spot.
It's very possible, yes.
It's actually not going to happen.
Okay.
That was a weird flex.
So, profit margin. I'm going to go 29, 31, and 33%. I'm going to go a little bit lower as they go along. Free cash flow margin, I'm going to do the exact same thing because it seems to be pretty in line. PE, I'm going to go 14, 16, and 18.
Agree.
And the current PE is 16. So I'm not so to me, that's like, okay, maybe it's selling for a reasonable amount. Now remember, on our pillars page, the 5-year PE and 5-year growth rates are much higher because we're taking the 5-year average net income, 5-year average free cash flow. But remember, this company has grown like crazy over the last 5 years. So that's why that multiple is much higher.
Jimmy, what do you think of those PEs right there?
Yeah, I think they're reasonable. They're
I think so low.
I would say a bit on the conservative side, but yeah.
All right, so
I'm okay with that.
I hit the analyze button.
And the good news, folks, is you can put in whatever you want. This tool's for you. You can use it however you want. Go ahead, Paul.
And this tool's for you right here.
That's right.
Guys, I have a high price of $375 that includes my margin of safety because I put 12.5% desired return in because an ETF will get you 9 or 10%. For your margin of safety, get a little bit more and a low side of 183. There was a time when this thing was selling well below even the low side. Very recently, in the last few weeks.
Also, those numbers that you put in, I think that is totally excluding anything that can be happened in the metaverse.
Yeah,
because this is solely based on Facebook being the structure and format that it's in right now.
And that's a great point, Mo, because look at these revenue numbers. Well, I will say this, Mo. I think the 12% high side is including Meta because I don't think. Well, maybe not. Let's see. 12% for the next 10 years times 132. Yeah, maybe you're right.
I mean, you have to think, Paul, how much, we've done the numbers in the past, Mo, how much does Facebook make per user?
Paul knows
Meta.
that answer.
I was looking it up.
But boy, oh boy, just my kids getting the Oculus, because I spoil them, I mean, they're dropping $20, $30, sometimes $50 on some of these games. Yeah. We've only got a couple, but whatever they're making per person, you start buying video games on a yearly basis, it's going to go way up.
Well, look at this. This is Facebook's revenue per user going back to 2011. I mean, 2021, they're $41 per user in revenue. They were at $5 before. Now, do I think it's going to go up 8 more times? No, probably not.
No, but to me, that's a fascinating chart because think about what we were saying earlier. The very idea of Facebook is that they're in front of half the world's population. Right. If they're in front of half the world's population and they're figuring out a way to increase how much they're doing, even if this were to go like that, but they're in front of half the world's population, the potential revenue is enormous for Facebook. It's really quite crazy.
Right.
I mean, I'm not even a huge fan, but just since,
I don't like Facebook.
Since Christmas. I mean, I've been on Facebook itself, Mo, for a decade, but since Christmas, with 2 Oculus machines and a few games, I'm probably $870 in.
I mean, they were $400 each. Games are the price that games were on the old PlayStation 2s and stuff.
Yeah.
$50-$60.
And you know the funny part about Facebook and my owning the shares of it, I actually don't use Facebook.
At all.
I don't either.
I love Instagram.
I use it. I don't use it. So I have an Instagram account because, I'm a creator. I have a Facebook page and all of that. But I don't really, like, my wife gets up and she goes on it each day. And, lots of people that I know get up. I don't check it. I don't use it for personal stuff. It is purely a business thing. So this isn't hey, I like what Facebook is doing. I don't really use it. But I can look at it and say, yeah, no, what they're doing is, one, the people that use it stay loyal to it. And it's just so big. The audience is just so big. What I think that people that are overlooking the investment opportunity might be missing is that Oculus is a big thing, but we're one innovation away from people going, the sentiment, which has been somewhat down on Facebook lately, the sentiment shifting and people going, oh my God, look at this product, Oculus 7, whatever it is. And people shift towards it. And when they do, this thing could explode. It's no problem getting back to $400 a share and then people will justify it and say, oh my God, look at they're generating $40 billion in free cash flow. Of course it should be at $400 per share.
So it's funny you say that, because in the App Store, in the Apple App Store on Christmas, that was the #1 downloaded app, was the Oculus app. So I look at this saying, okay, their earnings are coming out in April, and I just look at this saying, if something like that on Oculus comes out, that thing is going to explode on their earnings, and maybe that's the momentum that they need. Just keep pushing them up.
Exactly. You almost never know where that sentiment shift, and I think that's one of the toughest parts for many investors. It was a tough part for me for a long time, is to stand in the face of bad sentiment. I'm buying Facebook, I'm buying Intel as it's falling, sitting there going, oh, maybe I'm wrong. But if you've done the research, if the numbers are on your side in time, what is it? Buffett says that in the short run, it's a voting machine. The market's a voting machine. In the long run, it's a weighing machine. Give this time, the numbers will swing back the other way. And, I think Facebook will be a huge benefactor of the fact that it was this low.
Jimmy, let's get to your discounted free cash flow model. Walk us through some of the numbers on that.
Yeah, so this is a website that we're getting ready to launch. It should be up and running in the second quarter of this year. And basically what we do is we take free cash flow estimates. We get these from analysts. Facebook happens to have, or Meta, I suppose. Meta happens to have a ton of analysts covering them. And I think that that's helpful, because the more analysts that are covering it, in theory, you get a more well-rounded average. If there was just one analyst, let's hope they're right. So if there's just one, I'll usually just eliminate them, as, I want at least a few to get an average. So in the case of Facebook, they're projecting huge free cash flow growth going out the next few years. I like to use 7.5% required rate of return. Now, I do it slightly different. I have, they sort of bake in their margin of safety. I use a low required return and then add a margin of safety to it. So I would look for $394 is the fair value of Facebook stock, but then I would add a margin of safety for that. I'm not buying that thing at $350. I'm going to add probably with Facebook, I'd probably add 20% margin of safety to this, and I'd feel comfortable. That's why when this stock fell down to where I jumped in and bought it, I was more than happy to jump in and buy it at these levels, because there seemed like there was so much potential upside. Even if I'm wrong for a little while, give it time. I think that this stock over the long run plays quite well.
So is $230 ample margin of safety when you think it's worth $394?
Absolutely. I think the potential upside is huge. But when we're looking at the free cash flow, if these analysts are close, they don't have to be right. If they're close, $47 billion in free cash flow in a few years. This stock, right now, it's a $625 billion company, but we're talking about generating almost $50 billion in just a few years. That is an enormous gap. This stock should be significantly higher than it is right now. And it surprises me, because this isn't a company like Intel that has slower growth, and we're going to have to deal with that slower growth. This is a company that has fast growth, has been moving, and sentiment, people's opinions of it has simply shifted. Yep. And because of that, the market is giving us this enormous opportunity.
If you're a value investor waiting for a great play and you're getting a little antsy, you can join Mo in our Bid and Ask Nation, the trading platform and trading tier of our software and community. Mo, show us what they're doing with Meta over there.
So there's so many ways to trade this, and I'm going to pull up the day trading in a second, but this is one of my favorite dog stocks right now. And a dog is a stock where the trend is just coasting on the bottom. And you notice we always talk about these gaps. This is a major gap to fill. Eventually, this thing is going to pop into the sweet spot. It might be that earnings report that pops it there, but something is going to drive this thing, and this gap will fill. I promise you that. This one I'm very confident on. This one I'm putting in my long-term watch list to pay attention to. Now, it will face a little resistance along the way. These moving averages will play resistance in that run to that, what is it now, 300 level again? But eventually it will get there. Guys, this is my favorite, one of my favorite stocks to day trade. You could have gotten the opportunity to trade it twice today. It's as easy as this. Jimmy, do you do any day trading?
It's been a long time.
So I got these two into day trading. Seth was out there making $700 today in a matter of 4 minutes, something like this. Mm-hmm. When you see a buy signal, your red line pops over 80%. You're getting really good buying volume. You get an engulfing candlestick. You enter your position. You exit as soon as your red line drops below 80, or you put in some type of trailing stop. Right now, you're in this stock again. You had 2 opportunities to trade this today. Pops over 80%, great buying volume, a couple of engulfing candlesticks, and this stock is still going higher this afternoon. There's multiple ways to trade this. If you don't want to just sit there and wait from a value perspective, here's your answer. Come and join me in the Bid and Ask.
If you haven't subscribed to Jimmy's channel, Learn to Invest, please do. If you're a Jimmy follower and haven't subscribed to Everything Money, we'd love to have you. Both communities, both of us offer great software and a website where you can make better investing decisions, and we will be here for you. Jimmy, thanks for coming in and for this great video, and we'll keep you updated on Meta and Facebook as we hope it climbs. And boy, what a buy, guys. Interesting company. Jimmy, I appreciate you coming in. Thanks so much.
Thanks for
See you
having
next video.